Thank you for joining our March monthly discussion group. With tax season upon us, we thought it'd be timely to get into some tax topics and specifically around accountants and fits and other things. And kind of setting the stage, maybe some of the stuff we've observed over the last decade or so with the families we work with. Overall, as your wealth changes and grows, you need to kind of stay current with things. And I think a lot of people, nobody likes paying taxes, right? I mean, it's just a gene we all have in our system. Everybody hates it. And it's stressful this time of year, getting everything together, figuring out what to do. Do I owe money? Do I not owe money? You know, those kinds of things, thinking it. And then when you look at how much am I paying? Am I paying the right amount? Nobody likes to pay their accountant a lot of money to do their taxes. And what we've experienced over the years, it's kind of that old saying, you get what you pay for. So if you're looking for the lowest cost, you could see the stress accountants have these days with the extension of when 1099s and information comes out. A lot of it isn't out till the middle of March now. And trying to rush and have the accountants, it's just a very difficult position accountants are in. Whereas it used to, 1099s used to be out in January. There was a lot more planning time to be done. And it's just given accountants a really difficult time overall. And then when you're looking to pay a little bit of money for your accountant, they're rushing to get this done by the tax deadline. And it just ends up not being the best result. So I think we're going to take the time today to go through the topic a little bit in detail, maybe give some thought, shut out the accountants because they're in a difficult position here, and then maybe how to improve, you know, kind of that wealth return, because it's the old saying, it's not what you make, it's what you keep after taxes. And really a lot of this conversation is with that mindset.
Right. So, as JR, as you were mentioning that, you want to make sure that you've got the right accountant for the, right time of your life. And with that being said, the accountant that you have with, when you get your first job, might not be the same accountant that you need when you're more into your later years of retirement, or you get to some of those, end of life planning stages, and that's okay. The important thing is just to make sure you're working with somebody that's going to understand your needs, your family's needs, and is going to have the ability to give you the proper guidance along the way. So what we did here is we looked to kind of break down, your working life through end of life stages, and sort of some of the important things that you're going to be looking at when it comes down to tax planning. When your early working years, your main sources of income are going to be your job, employment, primary tax form is going to be your W-2, and if you've got an investment account, a 1099. And working with your account, some opportunities you're going to have are really for retirement contributions. Can you contribute to a traditional IRA, or can you do a Roth IRA, or those different types of things? And from a complexity standpoint, these should be fairly simple. A lot of these returns can probably be done by yourself, or through some software service. But overall, the spend should probably be less than $1,000. And then as you get into retirement, or you see a liquidity event within your business, again, kind of those main categories, your income sources are going to be from your employment. Also, if you do have a liquidity event, the sale of the business. Your primary tax form is going to get a little bit more complicated. You're still going to have a W-2. You're going to have probably a few 1099s, and you start getting those K-1s from other types of investments. And then again, what your accountant should now be able to help you with are going to be how to title your assets correctly, and then how you can look to plan out your depreciation schedules. And again, try and be the most efficient with your money. And again, as you get more involved, either more different parts of your financial life, the complexity of your tax return is going to be greater as well. So if this is going to be more or less a medium, have a complexity more of kind of a medium nature, that probably not going to need to spend more than that $1,000, probably anywhere in the neighborhood of $1,000 to $10,000. But then, once you get into retirement and through retirement, and then you need to have those end of life planning stages, that you are going to need more than probably one accountant. You might need a team, and things that you're going to need to look for are from, again, your sources of income are going to be from investments, Social Security, primary tax forms. You're going to really drop out the W-2, but going to have the 1099s, 1099-Rs from retirement accounts, as well as the K-1s. And then from the planning side, and this is really where having an accountant and accounting team is going to be important. that you're focusing on estate coordination, different types of gift planning, and again, using the opportunities available to you to maximize what you can, as JR said, what you can keep. And this is obviously going to be more complex. It's going to take a lot more time, and it's still going to be okay if you know that you're going to be spending a fair amount of money on this. So, as with all this in mind, and you get to the idea that, all right, tax docs are ready by, March, and you've got another month, I think an idea that we have is just, why don't you just file an extension to begin with? I mean, Megan, can you talk about that a little bit?
Yeah, so I think that there is some kind of apprehension to filing an extension, and some of it could just be a misconception that it has an increased cost or that there's some penalty for filing the extension. But typically, you still have to pay the at least the estimate on time by that deadline. But outside of the formal filing and making sure you have everything on time, it gives you that much more space to bring that together for both you and your accountant. So we strongly encourage that, especially when you have investment accounts, because those can come in much later than formal employer tax documents. And just to be cognizant of that, you always want to make sure to give your CPA and their team enough time to do good work on your behalf. If you give them a short window and you're not the only return I'm sure that they're working on, even if they're working at all hours, you want to make sure they're kind of giving you their best work, because they have a very important job at the end of the day. So just being comfortable with, maybe you already know you're going to file extension. If everything comes in on time and you have more than enough time to get it in normally, then that's fine. If not, then just feel free to do it, and it will relieve a lot of stress and anxiety for both you and also the team working on your behalf. So that's just something that we strongly encourage, and just to kind of get used to that, especially when you're bringing investment accounts into the fold.
So when you look at this, I mean, I think one of the things they're saying, don't be cheap on your account. When you're looking to save money, it's kind of the time allocated. So if it's going to be very cheap, you can't spend a lot of time. I mean, accountants are running businesses. If they spend all the time and there isn't, and you're not paying enough, it just doesn't work as a business. So you just need to rethink the amount of time allocated to this, because it's so important, and the amount of advantages that might be missed or being proactive. We just see a lot of mistakes by rushing through taxes and not spending enough time. So it's really reassessing and opening your mind to spending a little bit more, because the reality is you're going to get more value received when you spend more, is our experience.
Definitely. And then we get this question a lot, and it's kind of more what to look for with finding the right accountant. And we have a few categories, but a lot of these are somewhat straightforward, but you definitely want your accountant to be very detail oriented. And also, I think along with that is to be somewhat modern and have the ability to have electronic filings, and to be able to send secure documents, so you don't have to drive over to your accountant and bring them the pile of your tax documents that have accumulated on your kitchen table, just to help manage from a lifestyle perspective. But you want them to be very detail oriented. It may feel like a burden to you to get them all that information, but they need it to do the best work for you, and to be able to kind of see what you've done in the past, maybe areas of opportunity to enhance it moving forward. So that's a good quality, although it might feel a little bit invasive. It's what you actually really should be looking for. Another thing would be communicative. So you definitely want an open line of communication with your accountant, and then you also want them to have open lines of communication with other professionals working on your behalf, such as investment or investors, and potentially your attorneys as well, if there are some estate coordination that they need to be aware of, so that they're filing everything properly. An open line of communication with them and with you is very, very important for all parties. Keeping everyone on the same page could really make the difference between having great returns and making sure that all the boxes are checked and you're doing it the right way, and more importantly, that you're getting the benefits that you're rightfully due. So that is definitely something that is a great quality and something that you should be looking for. Another would be proactive. So are they kind of seeking out areas of opportunity to help enhance your return, maybe to save some money down the road, or just different strategies that you can implement with your family that could help? So just ideas there, and also that they're approaching those ideas with you and maybe also with your investment professionals to make sure that works with their strategy as well. So that's another quality that you definitely want to be seeking out. And then just matching your profile. So depending on what area of business you're in, you might have kind of a niche business that needs a special level of expertise. So do they actually have that sophistication to deliver on what you need? If you have a substantial real estate portfolio, are they going to have a team on their behalf that's able to kind of do what's needed to take advantage of everything that you can, and also make sure that you are that you're very compliant and that everything is filed appropriately, because there can be different levels of sophistication there. So I think just also seeking out what is their niche, what do they normally work on, and is that something that matches with your profile, is something to pay attention to.
And Meg, I think that's also very important to what you were talking about a little bit before about, filing the extension, that you're giving yourself and your accountant the time to talk to your other advisors, talk to the attorneys to, again, make sure that everything's done right the first time. That you got the old saying of measure twice, cut once, and doing your taxes, that still applies, I think.
And when you said the word time, Michael, time is money, right? When you think about walking through these processes that Megan went through, what does it take? It takes a lot of time, right? So if your accountant is going to help you through this, it's going to cost more. But the reality is your accountant's going to will have much more information to find other things and be much more proactive, fit all this together. And it just ends up with better results as you think about this approach and really get into more detail and spend the extra time.
And now, one thing that we hear from clients a lot, whether it's parents or their kids, the question comes up is, should I be working with, my parents' accountant, and parents are asking, should I be bringing my kids up with, and introduce them to my accountant or our accountant? And, honestly, the answer is it really does depend. But there are a lot of benefits of having a, more or less a single family accountant or accounting firm. Especially if you do have a family business where there are lots of different members. Accountant can help keep track of distributions, ownership percentages, and really look to kind of coordinate and consolidate and make sort of tax returns easier for everybody involved. And then similarly, if there are different types of family investments along the same lines, that the accountant can help manage the distributions, again, on ownership sides of things, and really look to help kind of manage the different personalities of different family members, work with the different interfamily dynamics, and really just bring out a lot of efficiencies within the tax planning and preparation process. Because at the end of the day, if you're in a family business or you have a family investment where you have grandparents, parents, and kids, maybe they all get along, which is great. Maybe they don't. But if you all have different accounting firms, there's a lot of different types of communication that is going to go between multiple people. And at the end of the day, things can get missed, things can get forgotten, and sort of having a single kind of trusted advisor on the tax side will help sort of reduce that risk and eliminate some of these mistakes, which at the end of the day could cost the family money in terms of, again, time that it takes, but also it costs money in terms of potential ways to reduce everybody's tax burden. So I think with that, I guess, Jared, were you want to say something?
So the tax is just never a fun discussion, right? I mean, nobody likes it. Nobody enjoys digging through. Nobody enjoys paying taxes. But again, what our experience working with this is just some good things to consider as you think about things. And really, it's just not a time, given the amount of time accountants have these days to finish things, to be cheap. You should really take a second look at how your taxes are being done now and reassess things, because the more time that is spent, which means a little bit more in cost, the better results we find. And again, from a family communication standpoint, it's good to think about the benefits of family accountants and other communication around this. Because again, a lot of this just gets lost in translation, either tax or estate or all these things. And it's just a good conversation to think about as we conclude tax season over the next few weeks. So with that, we want to thank everybody for tuning in to this month, and we'll touch base next month.
Thanks.
Okay, thank you, everybody.